All righty, folks. Good evening. Let's get this meeting started. As always, I do these meetings on the fly, and I just do them on the fly. So, if you have any questions, feel free to ask away. The more, the better. The more informative it becomes, the more questions that are asked. So, I'm going to start just by showing you what I do on a daily basis. How I start my morning. I'm more of a morning person. So so normally when I get up in the morning, the first thing I do is I just go to the scans and I start scanning for stocks. Now, I typically have a few scans that I go through. Again, we don't trade the market. We trade our beliefs about the market. So in my opinion, my belief is that in the short term, what works best, what matters the most is momentum and mean reversion. So I have a momentum scan and I have a mean reversion scan that I go through. Now, you know, different scans, different work in different market cycles. A month ago, the focus was the beaten down names, looking at all the 52-week lows, and also the focus was, for the most part, was the stocks that were down 3 days in a row or more. Because during that market cycle, where it was very volatile and stocks were bouncing really hard, what typically bounces first after a huge correction are the stocks that are down the most, which is the opposite of what you normally hear. What you hear is that you should be looking at the strongest stocks, and that is not the case. Not off the initial bottom in the first place. And you can see that. You can go back and look at every bottom or every major correction, and you would notice every single year what bounces the hardest first are the beaten down names near 52-week lows. The problem is someone wrote a book, books years ago, talking about relative strength and all these things, and relative strength is dynamic. It can be on a 3-month basis, a 12-month basis, a 36-month basis is all different. So the first thing I do typically is go to the inside day list. All right. But since the market has changed a little bit, I came up with it's not a new one, but I'm focusing on that one right now, which is I am looking at the best performing stocks on a 3-month, 6 months, and a 1-year basis. And if you saw this video, if you've seen these videos right over here, how I look for swing trades, these two videos show you exactly what it is that I mean. These videos were done in 2017. And the other day, as I was watching one of these videos, I got really excited. And I said, let me go back and focus on that list now that the market has rebounded for a couple of months, and let's look for ideas from that list. And so far, we had some tremendous winners from that one particular list. We're talking about NNVC, at 655 right over here, had a huge run. CODX at 1473, huge run. ALT 332, huge run. VXRT was good for, I think, 10 to 15%. CREX was good for a whole bunch, 20, 30%. And a few others, right? And if you go back, CAPR, this was good for 725, and I think it was trading. I saw some today at 910, up 30 something percent, I think. So we had some huge winners just this week from this list. And if you look at my what I consider my A+ setups, it's all the same thing. It's the same exact setup. The same exact setup. So you find that setup if you look at the top 100 to 150 names on a 3-month basis, 6-month basis, and a year basis. When I say top, I mean the stocks that are up the most within that time frame. Okay. And what an A+ setup is to me, and it's exactly what it was years ago, is I'm going to show you right now something that I wrote a long time ago when I used to do the stock pick of the week. Let me see if I can find it here. Let me see if I can find it. Just give me a second here. Okay. So this was one from 2017, I think. Axum, AXSM, which now is trading at $90 a share. And it says here, here's the bottom line. This is a momentum play. It fits the bill of all of our stock of the week plays. It had a catalyst that drove the stock higher. For example, right here on big volume. This one, for example, CAPR, 198 million shares. So for Axum, it drove the stock higher in big volume. To be more exact, the day after the phase 2 announcement, Axum traded 51 million shares, 5 times its current float of 11.4 million shares. Since then, the stock has been moving and trading sideways, which is exactly what Caper did, for example, right over here, which tells you there's been no interest in selling the stock. And then the stock printed an inside day on 285,000 shares, which at the time for this one particular stock, AXSM, it was the lowest volume since the big up day. Now, what that typically means is that the stock is ready for a second leg higher. That is an A+ setup. Okay, so you have a stock like Caper, all right, and like Axum Therapeutics, that it's been trading, it's been down for a very long time. Right over here, it does a 1-for-10 reverse split. A lot of people say that reverse splits are negative. Well, you're going to start to notice that some of these best performing stocks in the short term recently did a 1-for-10 stock split or a reverse split. Okay, this is not negative for the most part. This usually tells you, hey, put me on my screen. I might be ready to go a few months from now. Okay, so take a look at this right here and some of the other examples that I'm going to show. So here's a stock that's trading 130,000 shares, 34,000 shares, 25,000 shares. No one knows this stock. There is nothing going on. And then suddenly news comes out and the stock trades 198 million shares. Okay. That's not mom and pop and you and me buying CAPR. Okay. More importantly, the stock trades sideways 1, 2, 3, 4, 5, 6, 7 days in a row. As you can see here, this is, very volatile the first day. Volatile here as well, range of 6 to 8. Here, the range is from $6.52 to $9. Very volatile, still volatile. And then over here at the very end, it starts to tighten up. Look at the difference between these 3 candles, the high and the low, and these over here. Then it prints an inside day on 1.1 million shares. The average 20-day volume is 14 million shares. 1.1 is the lowest volume since the big up day. That's the candle right there. That's the trigger candle. Volume contraction, price contraction. Contraction leads to expansion. And then what happens? It's off to the races. Okay? And what you're going to notice is every single one of these plays that we play this week, ALT, same exact thing. 77,000 shares, 181,000 shares. Stock trades nothing at all. 1-for-30 reverse split. Stock does nothing at all. Then suddenly news comes out. It trades 26 million shares. Big up day. And here's what happens. Volatile, volatile. and it starts to tighten up right over here. Nice little tight little candle. Then it has a very nice move through the high of roughly 16%, not bad. And then right over here, it really starts to tighten up. And we bought the stock 5.4 right over here. Didn't do much. Came back down, tightened up again, and we bought it here through 5.12 and off to the races, right? So here we have two A+ setups, same exact setup. Now let's go to the other one, VXRT. Same exact thing. 172,000 shares, 259. There's nothing going on here. Okay, but news comes out, 61 million shares. Way too volatile. But here it starts to tighten up. Inside day right over here or right over here. And then off to the races. Then 59 million shares, very volatile. What happens here? Inside day on the very low volume, 2.5 million shares when the average 20-day volume is 11 million shares. And as you can see here, it's the lowest volume since probably somewhere around here. 2.5 million. You got the volume contraction, you got the price contraction through the high, off to the races. Okay? Now, let's go to the other ones. CODX, same exact thing. 54,000 shares, 86,000 shares, 160,000 shares, trading near a 52-week low, okay, not a 52-week high. Here it trades 35 million shares, okay. That first move higher, you're not going to catch that first move higher. Unless you're a fundamental player and you bought the stock and you've been owning the stock for all this time and then suddenly you got lucky, then you'll catch that first move higher. But we're not going to catch that first move higher, and we have no interest in catching that first move higher. It's not a necessity, right? So what we do is we wait for it to consolidate, go sideways, and provide another opportunity. What happens here at the very end? Look at these tight candles. Inside day, off to the races, okay? And then here, very volatile. And then here you get, again, the price contraction. Stock is down 1, 2, 3, 4 days in a row. This is one of our mean reversion scans. This is a momentum play with a mean reversion setup right over here. Through the high, off to the races. Right over here, inside day. So here, 413, long, 920, inside day, through high, through previous day high. Off to the races, right over here again, down 1, 2, 3, 4 days in a row. This is a momentum stock, a lot of momentum with a mean reversion pattern here in the short term. Then it's off to the races, right? And then right over here, another inside day, and we get involved here at 5.7 going through 1473. So now we have three of the same exact setup, okay? What's the next one that we did that did pretty well this week? Kate, we mentioned Caper already, same exact thing, right? So where do you find these stocks? What we do is we'll go to a scan. I call this my universe. The universe consists of all US stocks and ADRs trading above $2 a share with a 50-day moving average, as far as volume is concerned, of over 100,000 shares, okay? So I'm going to set that scan. What I'm going to do here is I'm going to go and I'm going to look at the recent performance, okay? I'm going to take out today's change. I'm going to take out the weekly and the monthly change. I'm going to look at 3 months, 6 months, and 1 year. So we're going to go through this very quickly, and we're going to find some setups for tomorrow. All right, let's see here. And as I'm doing this, I'm going to, again, look at the examples, WT8, WTRH. This thing trades 419 shares, 504,000 shares. No one knows who this company is. Suddenly, news comes out. The stock trades huge volume, 96 million shares, 100 million, geez, 100 million shares. Okay. Then it goes up. They normally do a secondary offering. They take advantage of the spike. The stock goes down. And then what you're waiting for is contraction. Where do you see the inside day? There's one over here. That did not work. One over here. This one did work. Down 4 days in a row. This one did work. Over here, inside day. Same thing. So we're looking for contraction. CODX, AHPI. This was another one that we bought at 12.23 this week. Went to 16 and change. That's the next day. Same exact thing. 523,000 shares right over here. The stock is trading 20,000 shares, 33,000 shares. There's nothing going on. This is a 52-week low stock. So when you hear someone say, you got to stay away from the weakest stocks in the market, they have no idea what they're talking about. Because this stock came from a 52-week low. Here's a reverse split. Came from a 52-week low, and then had a big move higher. Now, on a one-year basis, this stock right over here has zero momentum. But right over here on the short-term time frame, it's one of the stocks that has the most amount of momentum in the short term. So here, the stock trades 11 million shares, which is 10 times the average daily volume, okay? Then it's volatile right over here. Then you get the setup down 4 days in a row. We got involved right over here, 326 down 4 days in a row, up today through the high. Nice little 57% move in a matter of 2 days, okay? Then it starts to contract. We get to set up one more time right over here, down 4 days in a row, up today. This one did not work out. We went long. I went long at 1472, down 4 days in a row, up today through the high. That didn't work out. Right over here, I missed it. I passed on it. But here's the mean reversion setup, down multiple days in a row. The reason why we don't want to anticipate and just buy the stock when it's down 3 days in a row is because 3 days can turn into 4, 4 can turn into 5, 5 into 6, 6 into 7, and so on and so on. You want to wait for the change of pattern. What pattern do we have here? We have a pattern of lower highs and lower lows, lower highs and lower lows. So I missed this big move, and it came in very big volume, 1.8 million shares versus 299,000 shares. But then here it starts to tighten up. Through the high, took it. And the stock returned a tremendous amount in a matter of a day. There's no reason to hold it for multiple days because you got more than enough in the matter in 1 day, in a few hours. Novavax was another one. This one didn't work out for us, but this is a very similar play. Stock is trading 1.2 million shares, 1.3, not much going on. News comes out right over here. It trades 54 million shares. Then you just have to wait for the setup. If I was beginning and I just wanted to, if I needed to focus and I was just starting out, I would just focus on these 300 names. I would look at the top 100 names on a 3-month basis, the top 100 names on a 6-month basis, and the top 100 names on a 1 year basis or a year-to-date basis. That's exactly what I would do. That's what I would do, and I would just focus on those names, and that is it. And you're going to find the same exact setup every single time. This is what I consider an A+ setup. And I just thought about it just the other day when I was rewatching one of my videos. And I said, this is the perfect time to go back to that scan. Let me see if I can find here year-to-date change. Okay. So let's see if we can find some setups for tomorrow. I already went through the scan or through another scan and I found some names. BLPH, this was another one that we bought right over here, 1517. Made a nice move, maybe 10 to 15%, the same exact thing, guys. Here we go, 1 for 15 reverse split. Stock is trading 23,000 shares, big volume, 23 million shares. You wait until it starts to consolidate, it starts to tighten up. That's when you know people are getting involved institutions are getting involved and they're tightening, they're just buying it up slowly but surely the correct way, not this day trader way, okay? And this is when you get the opportunity. I&O, same thing. 600,000 shares. Stock is not doing much at all. Big volume right over here. 107 million shares. Okay. And then here, very volatile. This is only for day traders right over here. And then what happens? It starts to tighten up. Right over here, down 4 days in a row through the high. And it starts to tighten up here again. Okay. mRNA, same exact thing. Same exact thing. Inside day right over here. This would have been very tough to buy since it gapped up. Corrects. Same exact thing, guys. 21,000 shares, 13,000 shares. Suddenly news comes out. It trades 61 million shares. It starts to tighten up. Down 1, 2, 3, 4 days in a row. It was on the list right over here on 5-6. And also on 5-8. Inside day, down 4 days in a row. Inside day, I bought it here through the high. Long, 288, down 4 days in a row. Inside day, through the high today, 288. I think I sold some as high as, I don't know, 50%, I think, or 40% in the matter of a couple of days. Also, again, this stock was mentioned on Saturday when we went through the scan for the first time. Same thing, guys. This is the same plate, Vapo. 125,000 shares, 85,000 shares. Not much is going on. Big volume comes in of 1.4 million shares, which is not huge, but for this stock, it is humongous. And what happens down 3 days in a row, or here, inside day, I bought it here, didn't work out. Then here, look at this candle. Contraction leads to expansion. 297,000 shares. Okay. I go long right over here on 423, long 1837, inside day through the high. So we have the price contraction, very nice. And we have a volume contraction, 297, the lowest volume in who knows how long, okay? And then what do? You get a nice move higher. VTIQ, same thing. 155,000 shares, 6,000 shares. Look at this. Suddenly news comes out, it trades 18 million shares, and all you have to do is wait for the setup. Don't worry about catching this first move higher. It's just not going to happen. If you're a day trader, maybe you can day trade it, but it's not going to happen. We want to catch the second move higher, and you're going to get the opportunity usually 10 to 15 days after the first initial move. Because what typically happens here, you get the first initial move, you get the day traders, you might get a short squeeze, you get the secondary offering, and then if the stock is going to move higher again, that's when you start seeing the price contraction. What that means is that the sellers are drying up, and or whoever's selling the stock is a buyer, they're just picking up stock. That's all that means. There's a buyer there picking up stock. And when finally that seller is done and that buyer has sucked up all that inventory, that's when you get that price contraction, and that's when you get the volume contraction. That's when it prints an inside day. If you watch that 2017 video, it's the same exact. I say that exactly the same thing. These are not household names. Okay? They might never become household names. That's irrelevant. What we want is we want that first, that second leg higher. We want that quick push higher. That's what swing trading is all about. UNFI, same exact thing. APT, same story. Same story. Stock is trading 31,000 shares. News comes out. Look at the price contraction. Big volume again. This is just crazy. You just got to wait for that opportunity. Here, down multiple days in a row. I tried it right over here. Did not work out. Tried it right over here through this high, down multiple days in a row, and boom. Big move higher. Then over here again, contraction, nice little move higher. Over here, didn't work out. Over here, didn't work out. Over here, didn't work out. And here, I just sold some today up 10%. Now, this doesn't seem like a lot, but these are some decent moves. This is roughly, from here to here, roughly 15% in 2 days. Okay? So this one, again, we're long the stock, APT. Bought the stock here through this high at 1338. Sold some today as high as 10%. RCUS, same thing. Semi, same thing. So this is going to be on the list for tomorrow. I was just stopped out of this stock, Semi, today. All right. So this is another thing you need to learn. Every trade is random and unique. Whatever happened yesterday has nothing to do with this new trade. Every trade is random and unique. One has nothing to do with another. So we have this great setup right now. This is a great setup. I already showed you about 10 of this 10 exact examples just after going through 17 names. Okay. And some worked out, some didn't. All right. So just because it's the same exact thing every single time, it doesn't mean it's going to work out on a trade by trade basis. All we're doing is stacking the odds in our favor. That's all we're doing in the short term. So I was stopped out of this stock today. I like the stock going through 1174. So we're going to do semi. Buy stop 1184, an initial stop, let's call it 1051. It's a little out there, but this is, somewhat of a volatile name, and you want to make sure that when you are putting a stop, I don't concern myself that much with how far the percentage, how far how wide the stop is. I do, but sometimes in a volatile name, you got to give it room. Because I believe if you put a stop anywhere higher than today's low, you're choking the trade. You might get stopped out within the noise. So semi, I like semi for tomorrow. Buy stop 1184. Initial sell stop 1051. Okay. CBay, this is at some point going to set up. 21 million shares today. So we're going to put here 21 million shares. Over the next couple of days, as I'm going, throughout the day, in the middle of the day, what I do is I go through this scan, and sometimes I'll just look at why the stock was up that amount for that day. And I'll just write it down here, phase 2 studies, COVID-19, whatever the case may be, okay? VXRT, same thing. We play this for, 15, 20%. It looks okay. It's going to need to set up a little bit more, but same exact thing. No volume. No one knows the stock. And then suddenly news comes out, becomes very volatile. But look at the contraction here. Here's the contraction. Inside day right over here. Tight, 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 tight. Inside day right over here. This is the reason why the inside day is one of my go-to scans for momentum. And the inside day is important, but the context of the chart is what's really important, because an inside day, you can use it as a long or a short candle. All right, so ALT, same thing. Trades nothing at all, 26 million shares. It starts to tighten up right over here. Bought it, where was it? 355, long 54, right over here through this high. I choked the trade, bought it at 311. Didn't give it much room, but again, got stopped out, bought it right back. Bought it right back, right over here, 332. Sold it today. Some as high as 4.25, I think, from 332. ATHX, same exact setup. No volume. Huge news comes out. Stock trades 7.1 million shares, and then you just have to wait for the contraction right over here, inside day, off to the races. Okay, and eventually this will set up again. BMRA, same exact thing. Let's see if we can find some stocks for tomorrow. Apron, Same thing. SDGR, kind of. THMO, same thing. 27,000 shares, 17,000 shares, 81,000 shares, reverse split, 1 for 10 right over here. News comes out, 15 million shares. Here's a setup down 1, 2, 3 days in a row through the high. We got long at 823. We got lucky. I think they went on Fox News that day, off to the races. Right over here, down 1, 2, 3 days in a row, inside day. Long right over here at 1098. It did not work out, okay? Got stopped out today for a 20-cent loss. However, this is going to set up eventually again. And we know that this is an A+ setup, and we are stacking the odds in our favor. So we want to make sure that we flag this stock, which is flagged. This is my flag list. So when I see something like THMO, which I like, but it's not quite ready yet, and I don't want to lose track of it, I'll flag it. And I go through these names. I go through these names as well every single day, okay? SNDX, same thing. I got stopped out of this today, but it looks good. It's setting up. If the buy stop wasn't so far away, 1962, I would have it on the list for tomorrow, but it's setting up, and look, it's flagged. Okay, this thing was trading 120,000 shares. Suddenly it trades 14 million shares. Those are institutions who bought the stock. Okay. This is also flagged. Oil name down for a very long time. And what that means, very simply, as you can see here, it's very clear. The sellers are in control. Stock is down. There's nothing but overhead supply. Then eventually what happens is that the stock gets to a level where buyers find value, and the buyers and sellers find some type of equilibrium. Okay. The sellers are running out of supply, and or the buyers are just sucking up all the shares that are being sold. And that's when you have the sideways action. Now, when you have this sideways action, this is what some people call stage 1. Okay. And this is what sometimes when you hear people talk about technical analysis, don't buy 52-week lows because all you have above is sellers waiting to sell the stock. That is not always the case. Okay. In this one particular situation, the sellers are done. They sold everything. This is a brand new set of buyers. Brand new set of buyers. This is a stage 1. So what you tend to see at the very end is that you see a pattern of higher highs and higher lows. And right here, this is something to watch. Insiders bought 1.11 million shares just recently. We'll see if it sets up. And since this stock has been basing for a long time, almost 9 months, you can call it 10 months. The bigger the base, the higher into space it goes. The bigger the base, the longer it's going to trend. SWN, similar situation as RRC, down for a very long time. Oil stock, buyers and sellers found equilibrium here. Here's the pattern of higher lows and higher highs. This eventually will set up again. And since the stock has been trading sideways for such a long time, then something like this you can play for a little bit longer. It's been trading sideways for 10 months, okay? So when it finally goes from stage 1 to stage 2, you can expect a nice trending action in this type of setup. So for those of you guys who like long-term trades, this is what you want to look for. These type of setups that have been going sideways for a very long time. All right, so we're at 65 names. We found a couple of names. I'm going to get to your questions. Okay, BNTX. BNTX, I was stopped out of this also today. Very small loss, $49.97. I think I lost 60 cents. The stock the other day, pre-market, was as high as 53. I couldn't get any off. This is a COVID-19 play. So, so it's important to catch these theme plays, all right? There's a theme going on right now, work from home and COVID. So when you have a list of 10 to 15 names, you want to prioritize these names sometimes by whatever theme is working. And right now it's COVID. And you can see all the big winners that we had this week, they're all COVID related. So we want to make sure we are aware of these things. The other day in the room, I put a link of all the COVID plays. Okay, you go to finvis.com. Let me just show you so you can do this on your own. You never forget it. You go here, bunch of COVID, and this gives you, this is pretty amazing. That Apple now put COVID in their profile. So this gives you all the results for company who have COVID in their profile. And Apple is one of them. Apple has a collaboration with Google to develop COVID-19 tracking system. Very interesting. So here you have all the names. ALT, okay, ARCT, BLPH, BNTX. This is the one we're talking about right now. SEMI on the list. CVM, DFFN, DVAX, EPAM as well. IGMS, INO, IQV. So if you know all these names, TBIO, so if you, VIR, which is going to be on the list, so exhibit that we just bought the other day. So if you know these names and you see them on your watch list, then you got to make sure you pay attention to these things. FSOY, PDD, VIR, here it is. Here's VIR. So on a 3-month basis, VIR is one of the top performing stocks. So I like the stock going through 31.30 with a stop at 29.05. We know it's a COVID play, so we want to be on top of this if it triggers. We want to be on top of it. So this is what I'm doing in the morning, guys. So I'm doing this while usually either listening to music or listening to a video of Mark Douglas. And that's the reason why I'm putting all these things where you need to be able to convince yourself that you don't need to know what's going to happen next to make money. Trades are random and unique. You don't know the sequence of wins and losses. That's the reason why when you have, a list of stocks, you take them as they come. We have no idea. You have no idea how many times, and I've done this a million times, where I have a list and I'm playing and I'll say before the market opens, I think this was going to go higher. Let me highlight it to see if I'm correct. Okay, and it just doesn't happen. Sometimes you get that gut feeling, but you should not cherry pick the trades. You should take the trades as they come. Some will work and some won't. But we don't know beforehand which one's going to trigger, which one's going to be the best performing stock. We have no idea. None whatsoever. And if you think you do, you're just making it up. And then VC, again, same thing, 35 million shares. Big volume. You wait for the contraction down multiple days in a row. 1, 2, 3, 4. We got along right over here through this high on 221. Through this high here, down 1, 2, 3, 4. Down 3 days in a row through the high. And right over here again, COVID play. Okay, so that's 100 names. So now we go to the 6 months. We're going to come across probably some of the same names. CODX, Trill. Again, Trill is another one. We got involved right over here, inside day. I hope you got to see the importance of the scans that I have are based on market structure. Okay, so based on the way stocks move in the short term. That's what these scans are based. Not no, whatever they call them, flag, wedge, none of that stuff. Or, going through this, when you're, drawing lines everywhere, here's a line, and then here's a line, and here's a line. No, none of that stuff. Okay. All right. So, because look, you can draw a line here. and you can say this is the breakout. You can call that a breakout just because it broke this resistance level, but that's not the way trading works. Okay. And sometimes I draw lines, but there's no reason. I just, for whatever reason, I did it. But here, look, here's Trill, same exact thing. 1.2 million shares, 57,000 shares, 206,000 shares. This thing has done nothing at all, trading near a 52-week low, and then out of the blue, it's off for the races. Trades 54 million shares right over here. The 54 million shares, you can go to Finviz, punch up the stock, look at the date. You can write down the reason why, it went up that amount. But what you're waiting for is that contraction down 1, 2, 3, 4 days in a row through the high. There was the opportunity here, right over here, inside day. There's the opportunity. And from a short, and since we're daily swing traders, what we're looking to do is to take advantage of this little burst right over here that's going to last maybe 4 to 5 days. That's what we're looking to do. If you go through 1,000 charts, what you're going to see is this. Contraction leads to expansion. That expansion might last 4 to 5 days, and that's exactly when you want to start selling your stock on days 3, 4, 5. Happen here. So that way you don't have to sit through this sideways to down correction, then hoping that it will resume higher. Sometimes it does, sometimes it doesn't. Right over here, down multiple days in a row. Here's the burst, 1, 2, 3, 4, 5 days in a row, then sideways action. Okay, so we are in the moving business. We want to get involved on the first day of a possible multi-day move. That's what we want to do. That's the reason why when you look at my list, you're not going to find names that are up multiple days in a row. Okay? We want to get involved on the first day of the move, not when the stock is already up 5, 6 days in a row and everyone on Twitter is talking about it because it just went up 20%. By that time, it is simply too late. I'm talking about this breakout the other day, XBI. This thing went from 65 to 95. How would you ever consider this a breakout? Where a stock has come from is important when you're considering a breakout, because chances are if you buy a breakout like this, it's prone to failure. All right, so where were we? Trill. Need some water in the system, guys. Let's see. Stock like Vapo, it's going to set up huge volume right over here. It'll set up eventually. I'm seeing a lot of gap downs. Must be earnings or something in the biotech world. Look at these gap downs. BNTX, right? So we have this in the list. So BNTX, forgot to write this one down. 50.89 is a trigger. 50.99 is a buy stop. 47.43 is the initial sell stop. Semi we have. So far, most of these names they're not known names. We might know Tesla, we might know LVGO and TDOC, but the rest, these are not your name brand companies. And again, all we're looking to do is to take advantage of those short momentum bursts. And with this one particular setup, stocks that were left for the dead, stocks that have reverse split, and then suddenly had some type of news with a humongous volume spike. That's that's the A plus setup. That's stacking the odds in your favor. All right, so we're at 107, nothing there. Let's go to 1 year. Guys, if you have any questions, you got to, ask them. Ask the questions, because that's how you're going to learn a little bit quicker. The videos become a little bit more informative. And as you start asking, I start thinking about, more things that I can tell you guys. And also, what we're looking to do here is have you fish on your own. I can just very simply give you the recommendations, the picks every single day. But if you really want to be good at this and you really want to do it on your own, you have to learn, how to scan, how to look at things, how to, read stuff on Twitter and wherever it is, and then actually see for yourself to see if it's true or not.
Hey, how you doing? I have a question, if you don't mind.
Go ahead.
Name is Steve. I appreciate all the information. Learn a lot from you. I'm actually a college football coach, man, so I'm new to all this with trading and so forth. But again, like I said, following you, I'm learning and so forth. And I've asked you a couple times, but just to ask here, just so I understand, when you give stock, obviously it's up to us in our own risk. But when you give stock advice for the previous day high, right, and then you do a buy stop, at what point do you feel like as you hit that price point that you want and you're in the stock, do you just gotta constantly watch it and just feel good when you feel it's time to sell? Or like what's the trick to the trade of understanding when to sell once you're in a profit and once you're in green on it?
Right. It's a great question, Steve. Let me just go to these 100 right here really quick.
Okay.
Right. So in the room, what I put almost every single day is what I'm looking to do is to take advantage
Right.
of that small momentum burst. So if you go through 1,000 charts, you're going to see exactly the same thing. You can name any stock. Let's go to Netflix. And what you see here, you see this breakout here? We bought the stock right over here, going through this high. 1, 2, 3, 4. Then sideways to down. So this is what we're looking for. We're looking to take advantage of this burst, and that is it. So as far as targets are concerned,
Right.
like I said before, targets are completely made up. And this whole thing about the risk reward, that I don't take trades unless I'm risking $1 to make 3, that's also nonsense, because we don't know the outcome of the trade beforehand. And the market environment, the way the market is trading, has a lot to do with how much you're going to get from these bursts. So a month ago, when the SPY was in a death spiral, we were looking for short-term hits. If we got 5%, we were happy. But now we have a different market environment. We have a market environment right now over the last few days or so, not including the last 2 days, where even the chasers are being rewarded, right? So which means that if that's the case, then you start selling, maybe you start looking for bigger profits. So what you do is, here I have my rolling 5-day watch list. This is my watch list from 5/7, 5/8, 5/9, 5/10, the last 5 days. So as I go through this every day, this starts to tell me how stocks are moving. So here, and then NEPT had a tremendous move. So here I'm saying to myself, maybe I shouldn't be selling my first set of shares at plus 10%. Maybe I should wait till sell the first batch at plus 15%.
Right.
Because stocks are really moving. And let's say if they're not moving, maybe I should start selling a little bit quicker. Okay. So what we're looking to do is to get involved on the first day and sell most of the inventory by days 3 to 5. And we're looking to do that as many times as possible throughout the year. Look, and you can see it here. Look, I'm going to show you. Look, right over here, there's the burst. Right over here, there's the burst. Right over here, here it is. So you can actually go and use a random number Okay, like, oh, I'm going to sell. Like, for example, if you read IBD, they say you should sell most of your stocks when they reach 20%, because what usually happens, you get a sideways to down correction, and then you might get a resumption of an upward move or a downward move. So you want to avoid that. You can use a random number like that, like 20%. That
Right.
doesn't make any sense to me. And the reason why is the market is dynamic, and we might be in a market that's not giving us 20%. It's only giving us 10%.
Okay. So and I see exactly what you're saying now. So when you get that burst, right? Obviously the burst is in the green. Do you sell on that first red stick, or is it just you possibly wait?
I'm selling on the way up. So if you look
Okay.
at all the trades today, or any,
Uh-huh.
or when I put my trades every single day, what you're going to see is, just give me a second here, CAPR.
Right.
So let me see if I get the whole list here. Where is the whole list? So let's just take NNVC.
Right.
I bought the stock at 665. So what's 665 plus 10% is 730. 665 plus 15% is 765. So I sold some at here 755, 790. What's 665 plus 20%? That's 798. So I'm selling plus 10, plus 15, plus 20, plus 25%. I'm
Okay.
selling slowly but surely. Okay.
Got you.
At the same time, as I'm selling on the way up, I'm also trailing with a stop underneath the stock price, just in case we don't get to those targets.
Okay.
Okay. So that's for a regular trade. If you get a trade from the down 3 days in a row scan,
Right.
then you can do that in a mechanical way. And I'm going to show you. So when you get a trade from the down 3 days in a row scan, if you want to do it just mechanically, what you do is you can sell on the way up, or you can put your stop at the previous day low and raise it every single day. Let me give you some examples. Uh, just give me a second here. Let me give you an example how exactly. Okay, so this is exactly how, if you buy a stock from this one particular scan down 3 days in a row and up today through the high, right over here down 1, 2, 3, 4 days in a row. The green, that's the buy stop through this high, through this
Okay.
period, all right? The
Yep.
initial sell stop is right over here. The lowest low on this pattern of lower
Okay.
highs and lower lows. Now, at the close of this day when you bought it, your stop goes from here to right over here.
I got you now. Okay.
On the close on this day, your stop goes from here to right over here, and you keep going until the pattern changes. Because what you have here is a pattern of lower highs and lower lows, and then you get a pattern of higher lows and higher highs.
Got you. Okay.
Okay. So
Yeah.
I normally do not wait until that pattern breaks to the downside. I like to sell on the way up. We always have a choice. We can sell on the way up, or we can sell on the way down. I like to sell on the way up. Right? You can also do a combination, diversify your sell orders. You can sell some on the way up and then allow the market to take you out of a piece. Because for all we know, the same way that down 3 days in a row can turn into 5, 6, 7 days, we can get into a stock that might go up for 10 days in a row.
Got you.
So
And
diversify your sell orders.
am I also correct in saying you like to wait till about 9:45 a.m. till things calm down
Not really.
before? No.
No, not
Okay.
really. It depends. I'm gonna see if I can, if TraderView, the software that I use to put in the trades, I'm gonna see if they have the timestamp uh,
Got you.
of the trades. I'll give you a perfect example. Someone in the room, who was a Swing Italy, I think it was, that he asked me about ALT. Um, And he said, look, the stock is already trading up in pre-market. Dude, did you take it? I said, I don't take trades in the pre-market. Okay. It's just too risky, especially if there's no volume. But I
Right.
told them, but now you know which one you got to focus on immediately. And now, so ALT, this is coming after, I think, NNVC, COVID play. AHPI, COVID play, COVID plays are in play. This thing triggers the first couple of minutes. I took it.
Okay.
Okay. So again, you need in certain market environments, where we open strong and close weak, we're not going to want to take those trades, right? But
Yep.
this is where you have to have the situational awareness where you can start looking at your rolling 5-day watch list and you can start saying, hey, this is what's happening right now in this current market environment. So in another market environment, I might tell you, look, it's the same thing is happening where we're gapping up and closing lower. So let's not take those trades early in the morning. Let's just wait. In other market environments, it's completely opposite. And sometimes when we have a theme that's being played currently, like the COVID play, and it
Uh-huh.
triggers, you want to take it. Even if
Okay.
it doesn't work out, you want to take it. Okay.
I
And then,
appreciate it.
Steve, once you have a tremendous sample size,
Yeah.
you can also diversify your buy orders. And you say, look, the last 10 stocks that I bought, I bought it right at the open and it came down. So why not buy half at the open, let it settle, I'll buy the other half later on throughout the day. All right. Now, there's certain times that I do skip some trades at the open. And here's
Okay.
why. Here's why. Maybe I have something like this that was on the list on this day right over here, going through this high down 1, 2, 3, 4 days in a row. The buy stop was 90.56. However, when the stock opened right at the open, it had a $2 spread. It was 90.60 by 92 or something to that effect. I passed on it. I couldn't take
Okay.
it. Okay, so something like that, I'm not going to take in the first couple of minutes because the spread is too wide. There's certain times that there's not enough volume for me. So it may be a trigger, but maybe it only traded 2,000 shares. I can't take that because then I'm going to move it on my own and then it's going to come right back down. Okay, so it depends. I mean, today, Drip, the only stock that triggered today, this thing took off right at the open. It was just too quick for me.
Yep.
Okay, so a lot of it depends. A lot of it could depend based on the spread is too wide, not enough volume. It could be that the market at the time is different. The market changes. There are different market environments. But right now, one of these COVID plays triggers at the open, I'm taking it.
Thank you.
No problem, Steve. Let's see what we have here. All right, so we went through these. All right, so we got 3 names: Semi, VIRB, NTX. Let me see, what am I missing here? Acre. Why didn't Acre come up? So Acre, which is one that I was stopped out today for a 12-cent loss. I like the stock. COVID play, same exact thing, same pattern. No volume here. 66,000 shares, 467, 127,000 shares. Nothing at all. Big volume, 56 million shares. 4.6 announces progress in its COVID vaccine. Okay. This thing was ready. I mean, I think if it wasn't for the market selling off today, this thing would have been off to the races. I like the stock going to 381, buy stop 386, initial sell stop 336. Okay. Now I like these stocks, right? They are in play. They fit my A set of criteria. That doesn't mean they're going to work out. Okay. And I'm going to take my stops. I took this stop today. I have no issues buying it back tomorrow. This is not a right or wrong endeavor. The trading is not about right or wrong. It's about probabilities. I'm not thinking about the next trade. I'm thinking about the next 1,000 trades. And when you're buying and selling, when you're having 20% winners on a consistent basis, and you don't have an issue finding winners, you're not going to care about the losers. Irrelevant. It's just irrelevant. It's all part of the game. You guys have seen my P&L. This is with a 50% win ratio. And this right over here, it's never going to change. If you look at any stock, go through 1,000 charts, you will see exactly the same pattern. Consolidation, rip higher, down, higher. Same exact thing. Big base, trend, down, up. You go through anyone's returns, any hedge fund manager. any mutual fund, the S&P 500, you will see exactly the same thing. These things are unavoidable. This over here, the market is ripping higher. I couldn't buy a winning trade. It was a chop fest for me right over here. Okay, this is going to happen. The key is that you want this to happen over and over and over again at higher levels. That's what you want, for it to happen at higher levels, not to try to avoid these things. Or if something like this happens, you're going to go out there and change your strategy and change your scans. No, you don't do that. This is the reason why it's important that I give you the scans and you make them your own. Or else you won't be able to sit through this. All right? You will lose faith right over here, only to get excited right over here. And then this happens and you lose faith again. Okay? All right, so we got AKER. What are the other ones that I flagged here earlier? AYTU. Why isn't this coming up? Okay, I know why. The reason why, this is another one, right? This is 172, buy stop 180, initial sell stop 152. The reason why this did not come up is because I have a price filter here of $2 a share. Okay, but this came up somewhere and they printed an inside day. This is another COVID play. Stock is trading 260,000 shares. Trades here 174 million shares. Too volatile. You can't get involved. Here's the opportunity. Down 5 days in a row through the high. There's one. Here's a second one. This one didn't work out. And now here's a third one. Down 4 days in a row. You get a nice rip higher of roughly 15%. Right here, you get the inside day. And this still looks good. So I like the stock going through 172, buy stop 180, and initial sell stop 150. Let's go through some of these things. All right, Frank, I'm sure it's experience, but you seem to scale out with more exits on some of the big winners. Are there characteristics you look for to know to scale out smaller at first and shoot for higher targets? I think I ended ALT at right. So a lot of it, the targets, again, I don't have any targets coming into a trade. My target is up. My time frame is 4 days, 4 to 5 days. What the market gives me within that time frame, that's up to the market. I can't control that. The other day I had APT, I think it was, and I sold it for it. Oh no, just look some recent trades. QRA, KURA. I sold this one right over here. The reason why it was in the 4th day. Only gave me, I don't know, 5-6%. Can't do anything about that. That's what it gave me within that time frame. So you got to get rid of it. So every single day, as I'm going through my holdings, I'm jotting down the symbol KURA, and I'm putting the whatever day it's in. If it's on day 3, I want to sell some of those. Day 4, I want to sell. I want to stay with the day 1s, day 2s, right? So here, this only gave us a couple of percent, whatever, 6%. That's what it gave us. XBIT. Same exact thing. So once the stock gets to day 3, 4, 5, if it only gave you 2%, then that's it. It only gave you 2%. So again, as far as scaling out, the rolling 5-day watch list tells you whether you should be selling a little bit sooner, or maybe you should be holding on a little bit longer or selling less. So with the COVID plays, let's say if I have 1,000 shares, right, and I know they're hot, I'm going to sell 50 shares plus 10%. I'm going to sell 100 plus 15%, 300 up 20%, like that. So that first sale is usually the least amount of shares. And then I start to increase the sales slowly but surely. I'm not looking to catch the top. I'm not looking to catch the bottom. I'm looking for that burst, 20 to 25%. I'm looking to do that, if possible, 1,000, 2,000 times throughout the year. Because I believe it's a lot easier to find 100, 200, 10% winners than 100% winners. So I believe that. So the characteristics for you to know to scale out smaller at first, I always scale out a little bit smaller. Always. Unless, of course, if the stock is already on day 3 or day 4 and it's only up 5%, then I got to scale out bigger because it's already on day 4, day 5. So my targets is based just on market structure, based on how many days the stock is up. If it's already up 4 or 5 days in a row, you got to start getting rid of it. And you take that money and you buy something that's just getting started on day 1. Okay, so in the short term within my time frame, entries matter. Entries are extremely important. Would you consider a stock like Ever earnings catalyst 3rd day in a row? Right. Yeah, there's nothing wrong. I mean, Ever is already set up. It's down 4 days in a row. All right, so this is gonna fall into this little. It's gonna fall into this scan right here, EVER. As you can see, it'll come up right over here. For me, if I wanted to take this trade, then I'm gonna take this trade through 50.40 with a stop with a initial stop of 46.73. Earnings as a catalyst. Yeah, so it had earnings, right? This is also going to come up in one of those stocks that was trading very low volume, and then right over here it had huge volume. So this is a catalyst, but you have to wait for it to set up. This is not the market of the 1990s, okay? I still see people talking about lockout rallies. It's like the funniest thing in the world. Like, oh, this is a lockout rally. This is not 1999, where you had a stock that came out with earnings. Just give me a second. This is not like 1999 where you have stocks that came out with earnings. And they gapped up and then they went up, 100 points afterwards. This is not 1999. So when you have something like this, what's happening is that you get that big move higher and then the stock stalls out. Okay, you look at all these gappers, I forget which one, but they usually stall out. So you want to wait for the consolidation or glue. All right, so here's glue again. Had a big day. Just wait for it to set up again. All right, because if you look at glue, this was probably also earnings right over here. And look what happens. So years ago in the 1990s, you would get something like this, and it will continue to go higher. That's what you call a breakaway gap. That doesn't happen anymore. Information is flowing too quickly. Back in the 90s, we didn't have the internet. So something broke out, and this is the reason why some of these newsletters back in the 90s did well. Something broke out, right? You were able to buy it right at the close. Because then at the end of the day, when people got the newsletters, where however it was, via fax, we used to get faxes, something called JAG notes back in the 90s, 97, 98, 99, and 2000, we get the JAG notes. And that's the reason why almost every single stock that had a big up day or had a big breakout, it went up the next day right at the open because people got those JAG notes, those faxes, and they put their orders in right in the morning. That's no longer the case. The information is flowing so quickly that we're all getting the information at the same time. So you're going to get that big move in that first day, and then it pretty much peters out. Okay, so forget about those breakaway gaps. That's just for the most part, it's nonsense. As markets change character, would a 20 to 30 or 45-day Momo scan make sense? No. 20 days, anything under 30 days is just too. It's usually that the momentum in the 30-day time frame. If you look at the studies, if you Google momentum research by Jagandir Singh, I think it was, you'll see that 30 days usually mean reverts. Okay, and if you go through all the stocks that we went through, the first 30 days, it's usually very volatile, and they usually. See right here, the first 30 days, usually very volatile, and they usually mean revert. So no, you don't want to do 20, 30, or 45 days. 3 months is 65 days. So that's what you want to do, because you're not going to find these type of setups where the stock starts to tighten up, which is usually, like, for example, here, it starts to tighten up. This is day 21. And even if you went on a 3 month, if you did the 3 month, this is still going to show up as one of the top plays. The stock goes from 20, even here, it goes from 20, it goes up 50%. So it's still going to show up as one of the top plays on a 3 month basis. Do you find this? Oh, it always tends. No. There just always tends to be a theme. No. Not always. I can name a whole bunch of them. So now we got COVID, work from home. 2017, we had the Bitcoin. Years ago, we had the Triple D, Rare Earth. Before then, with the MCP, the Mali, the REE. Then we had, a couple of years ago, we had the IQs of the world, right? We had the IQs right over here, IQ, Billy, Sogo, all at the same time. So no. Then we had the wheat stocks, right? Which, that video that I did about theme plays, with the wheat stocks, ACB, we had that right over here a few times. So no, we don't always have that. But if you can find it, right? If there's one, then you got to go for it. Right now, it's the COVID place, and news is coming now, and that's what people are trading. So that's what you want to be involved with. So this is what I'm doing every day. Okay. Here's another thing that I do, right? So I hate to leave. Okay, yeah, no problem. You as well, Steve. Here's what so once I have my watch list, okay. Here's the watch list. This is all done. I mean, you guys see that you get the watch list at 5:30 in the morning. No, I'm sorry, 6 o'clock in the morning. And I'm up by 4. This is actually late for me. So here, WL watch list 5:14, which is tomorrow. What do we have here? We have Acre, CEMI, BNTX, VIR, HATS, NH, CARS, AYTU. I do that. I change this to tracking, which means that it gives me the tracking date, when it made the list, 5/13, whatever, and how much is up or down since it made the list. So CATS, this is in the down 3 days in a row scan. The high is 2055. I'm going to do this. I'm going to put an alert here, 2055. When the stock hits 2055, it pops up here in the middle, and a horn sounds like a truck horn. Bam, bam. Okay, that's what happens here. NH 219, or whatever. This is, let's just put this at 219. Cars 530. This is all I'm doing, right? So this is all done pre-market. It's being done at yesterday's highs, which means that when it triggers, I have time. If I have not already put the buy stop in, it gives me more than enough time to put the order in. Because after I do this, I already know how much I want to risk per trade. And I put that on my little Google sheet, and it gives me how many shares I can buy. So in other words, let's take this BNTX. Buy stop is 50.99. The initial sell stop is 47.43. That's $3.56. Now, if I have a $100,000 account, and I only want to risk 0.25% of the total capital on each trade, which means I want to risk 250 shares, I take $250. I take $250 divided between the difference of the buy stop and the initial sell stop, which is 356. That means for BNTX, I can buy 10 shares. Okay. For AYTU, buy stop is $1.80. Initial sell stop is $1.50, 30 cents, 250 divided into 30 cents. I can buy 833 shares. And that's what I do. I figure out how much I want to risk per trade. I'm looking to risk, for the most part, the same amount on each single trade because, again, we don't know which ones are going to work out, which ones will be the big winner, the big loser. As you start to gain more experience, okay, and you find some of these A-plus setups, then you have to, no doubt, put a little bit more behind those because the odds, they're a little bit more in your favor than just a regular play, all right? Because we already saw, out of the top 30 plays, almost every single one had the same setup, okay? But you want to get into the habit of risking the same amount. So this is my main screen right over here, guys. This is it. I work with two screens. The top screen is just another chart. This is my main screen. This is all I have. My rolling 5-day watch list, flagged, the list for today, and my holdings. That is it. I am not looking at 7,000 stocks. I have no idea what the market did today throughout the day. I mean, I do here because I'm short, because I have some of these inverse. That's the reason why I have to SPY. But on any given day, I have no idea what the market is doing. This is what's driving me. Okay? If I want to know what the market is doing, I go here and I get the indices, I get the sectors, I get some of the growth names, the Microsoft, the FANG names, the banks, the energies, the new, Momo tech stocks. But I don't even come here. Okay? This is my list. This is what I focus on right here. I have no idea what the market is doing on any given day. Is there any reason not to buy odd lots now? I don't know. Buy whatever you buy. Doesn't make a difference. 83, 86, 87, doesn't make a difference. Commissions are free now. That's just unbelievable. So, makes no difference at all. Any other questions, guys? All right, let me go through some of these things here. Right. So when I have 10 names on the list, I'm not scrambling looking at 5-minute charts or, oh, look, it's up here and it looks extended. Let me sell it. I don't go from daily to intraday charts because what looks extended on the 5-minute chart is completely nothing at all on a 30-minute chart or an hour chart. Okay. Look at this. Where's the extension? None. So I don't do that. All I'm waiting for is for this thing just to, once they trigger, it comes up and I just click on it and it comes up. And then I just put the order in if I'm going to put the order in. That's simple. Okay, can you please repeat the formula, determine the risk of shares to buy? Yes. Hold on. Let's see if I can write it down here somewhere. Look, these are some of the things I just put in the room every single day, by the way. Okay? Because things don't change. If you're going to be consistent with results, you have to find a way to trade in a carefree state of mind without the potential to define or interpret market information as painful. In other words, if you own a stock and it's ticking down, that information is not painful. If it's ticking higher, that information is not great. It's just the market, right? It's got no perspective. The market has no idea who you are. Every single one of these beliefs, every moment in the market is unique. And an edge is nothing more than an indication of a higher probability of one thing happening over another. So when you play basketball, too bad the coach left. He's a football coach, but you play basketball and you're a shooter. All they tell you to do is think about the next shot. When the bad play happens, think about the next play. The previous play has nothing to do with this play. Think about the next shot, next shot, next shot. There's a random distribution between wins and losses, okay? And you don't need to know what's going to happen next to make money. All right, so where am I here? Let's see if I can do this. No. Okay, so let's say you have a $100,000 account. If you wanted to risk 0.25% of the total capital, that equals $250. 0.50% of total capital equals 500, and 0.75 equals 750, and 1% equals $1,000. So which means you figure out where you're comfortable risking per trade based on, let's say, $100,000. If it was 250, just do the math. If it was 10,000, just do the math. So now let's just say that we have a stock that's trading, that the buy stop is $50 a share. Buy stop is 50, right? And sell stop is $48 a share. So the risk is $2. If you wanted to risk $1,000 on this trade, you take 1,000 divided by 2. That means that you can buy 500 shares. That's all you do. If you wanted to risk only 0.5%, you take 500 divided by 2, which is the risk, $2 a share. You can buy 250 shares. If you wanted to risk only $250, then you do 250 divided by 2. You can buy 125 shares. That's it. So when you do something like this, you might come across that you own that the trade is 20 to 25% of your assets. That might make you a little bit uncomfortable. So here, if we wanted to risk $1,000 in this trade and we had to buy 500 shares, that's a 50% allocation into the trade. Now that's pretty much irrelevant unless the stock gaps down, because what you're risking is 1,000. So you have to be aware of that as well. So that's how I do it, where I'm risking a certain amount of money of the total capital per trade. And I try to keep that as consistent as possible. So, one trade could, the sell stop could be 10% away, and one trade, the sell stop could be 4% away. It's pretty much irrelevant because I'm risking the same amount, 1,000 in each one. And, one sell stop is 10% away, so I have less shares of those more than likely. And the other one where it's only 4% away, I have more shares of those, but it's still the same risk. I hope that makes sense. Any other questions? Okay. So again, thank you for your time. And like I said, we already know what the go-to setup is for now. the go-to scan. And you can see that, you can visualize it, you can see it, you can go through the best performing stocks on a year-to-date basis, and you will see the same thing over and over and over again. Very simply. I haven't gone through the inside day list, but I'll go through it, and if anything else comes across, I'll put it in the room. I'll put it in the room tomorrow. But usually when you know what you're looking for, you're normally going through these charts very quickly. I know exactly what I'm looking for. So I don't have to see much. And when I stop is because I saw something that just, they got my attention. But this is it. This is the way I'm looking at things that quickly. Because I know exactly what I'm looking for. And if you look at all the names in the watch list, they're all pretty much the same thing. Contraction leads to expansion. Contraction leads to expansion. People might call it different names. Okay. You might hear in one place, they might call it a 3-week tight pattern. That's just 15 days of consolidation. That's a tight pattern. You might hear it at another place, VCP, volatility contraction, same thing. Bollinger Band contraction, same exact thing. All right. So it's all the same things, as they call it different names. But once you start to study and start to see how stocks move, then all those names, you'll know there's just different names, but it's all the same thing. All right, guys, I got to go. Great chatting. Any other questions, just hit me up in the room or just email me. All right. So trade them well and be well. Good night.